The crap may be about to hit the proverbial fan for the global economy with an explosion of new factors this week, all of which are pointing to the fact that we are going full steam ahead into big trouble. As the economic battlefronts continue to expand between major economies, the question must be asked, who will come out on top? Spoiler alert, guys, it's probably not going to be fiat. Now, before we jump into today's stories, Tixel is in phase 2 of their fundraising. At the time of recording, there was still a 29% bonus available. Tixel is bringing private, feeless, and instant transactions into the crypto world. Think nano, but with privacy. It is still in the early phases of the token sale, so if you are interested, it's a great chance to get in early on Tixel. DYOR as always, guys. And if you want to grab yourself some sweet Tixel, then I would greatly appreciate if you clicked on the link down below. It is a referral link for which I will receive a small commission, but at no additional cost to you. So, the stock markets took a big tumble this week after China announced that it was devaluing the yuan in retaliation to new tariffs from Washington on, well, basically everything coming out of China. Now, this could be the first big opening shot of an all-out currency war between the dollar and the yuan. And it is far from certain that the dollar will do very well in this battle. Quantitative easing, rate cuts, international buyers dumping U.S. bonds, 3 new competitors to the U.S.-led SWIFT network coming in this year, discussions between major oil sellers and buyers about using gold-backed cryptocurrencies to trade oil, thus supplanting the U.S. petrodollar's dominance in the markets, and the trade war itself are all putting massive strain on the dollar. This is the first time in more than 10 years that China has let the yuan weaken beyond the level of 7 to the dollar. Well, the dollar has long been lethally weaponized. This is a definitive sign from Beijing that the yuan will also be used as a financial weapon. Now, a lot will depend on the U.S. response to China's actions here, but in general, currency wars are a brutal race to the bottom in which countries get locked in a cycle of devaluations, and this can be devastating both for consumers and for businesses, triggering inflation and sending asset prices plummeting. The U.S. has labeled China as a currency manipulator, saying that it is trying to gain an unfair advantage in international trade by devaluing the yuan, which is, of course, pretty rich coming from Washington. The U.S. will now ask the IMF to intervene. The IMF, of course, is an international organization, but which is U.S.-controlled and has long been the financial hitman for Western interests. The U.S. may also try to sell dollars to lower their value. The devaluation, though, is a very high-stakes move from China since it could cause a lot of economic pain domestically inside of China, which could lead to even more capital flight out of the country. $680 billion left China during the economic turbulence of 2015 when they devalued the yuan. We have already seen Bitcoin being used for capital flight in China, with Bitcoin now being many magnitudes more liquid than it was in 2015. I can imagine that much more Chinese capital will flee into and through Bitcoin. But it's not just China, guys. Investors the world over are hiding their wealth or simply getting it out of their country to safer shores using Bitcoin. As the trade war between China and the United States continues to upset the global markets, this trend is likely to continue. We are also seeing investors pile into safer securities such as sovereign bonds, but remember, nearly half of sovereign bonds have negative yield rates. Just last week, the 30-year German bond went into negative territory for the first time ever. In fact, there are fears that the German economy, Europe's economic powerhouse, is itself sliding into recession, which of course could drag the whole European Union along with it. We can add their bonds to the ever-growing list of bonds with negative yields. And it's crazy that even with bonds being so damn unattractive, that investors are still buying them because they see them as being more stable or safer than stocks or other investments at this time. They're also a place where traditionally people have parked money during turbulent times. Gold, of course, is another place where investors are currently flocking. In fact, gold is up 2% this week, hitting a 6-year high in response to the yuan news, and 2% for gold. That's a lot of money flowing into gold, guys. But piling into digital assets, that's a relatively new thing for a lot of investors. Remember, there was no Bitcoin back during the 2008 global financial crisis, so it's going to be very, very interesting to see if all of these safe haven buyers will be a big part of the push to get Bitcoin up and over the market cap of gold. And actually, if things get even bumpier, then the price of gold is likely to continue to grow as well. And there is indeed substantial turbulence ahead. Brexit now appears to be imminently coming. In fact, search results for Bitcoin in the UK had a big spike when Boris Johnson was sworn in as the new Prime Minister of the UK. The inversion of the yield curve in the US Treasury markets is a big indicator of stormy weather as well, since an inverted yield curve has accurately predicted the last 8 US recessions since 1960. In the Asia-Pacific region, outside of China's yuan devaluation this week, we did see surprise cuts in India, Thailand, and New Zealand. New Zealand! Woo! They mentioned us. With farther rate cuts expected in Australia after the Aussie dollar slid to a 10-year low on the anticipation of rates being cut inside Australia. Over in the Philippines, the central bank is also eyeing up rate cuts. This all a week after the US announced that the Federal Reserve is cutting rates, and a few weeks ago that the ECB is likely to cut rates. And honestly, the Chinese trade dispute escalation, it is just one small item on a growing list of geopolitical dysfunction. Ongoing protests in Hong Kong, of course, are rocking China's window on the world. Oil tankers are being seized in the Mediterranean and in the Persian Gulf, all adding further fear and fuel to the fire. Currency wars have actually been going on for quite a while now, but these latest moves show that things are really heating up. And this is such a multifaceted topic, it's hard to even know where to begin with, and I could probably do hours upon hours of videos breaking down each country and all that stuff, but the thing to realize is that due to the globalized nature of the economy, no one anywhere is safe. And of course, in the end, there's only one thing that is perfectly suited to a global currency war. One thing that has no leaders to arbitrarily cut rates. One thing that is above tariffs, above trade wars, above capital controls, above politically driven sanctions. One thing that only grows stronger the more it is attacked. It's Bitcoin. You guys know it was Bitcoin the whole time. It's Bitcoin. And of course you know it's Bitcoin because it was made for this. But I really feel like all the stories here just underline how totally messed up and inherently anti-human the global economy is. Politicians play all these games, and it doesn't matter how many people get hurt. It's about who has what and who's in charge. Every purchase of Bitcoin is a vote against the fading fiat system and a vote for the future decentralized economy. 1 million Satoshis today is only around 120 US dollars. Screaming bargain if you ask me. Anyway, guys, thank you so much for tuning in to today's video. As always, I massively appreciate the time you take out of your day to come over here and check out these videos. I hope you guys are having an awesome day wherever you are today. And if you did like this video, hit that thumbs up button, it'd be super awesome. And if you are new around here, make sure to subscribe to the channel and click on that bell down below so you know when I put out a new video. Long live the blockchain, and peace out till next time, guys.